Let's kick things off today, though, with those big four tech earnings we got after the bell yesterday. Certainly seeing some big moves in the market. Apple is up about 7%, Amazon up roughly 4%, and Facebook up about 7.5%, let's say. Google, though, the one laggard today, down about 4.4%. After the company posted its first year-on-year revenue decline as ad spending dipped. Let's try to break all of this down for you. It's Santosh Rao. He is the head of research at Manhattan Venture Partners. Santosh, certainly a lot to get through to. I guess we'll start with the overall picture, though, because these are the companies that have certainly benefited over the last 4 months from the big push to work from home, the big acceleration in digitization. What stood out to you in the numbers we got yesterday?
Yeah, I think what really came out was, as if we needed to be reminded, these companies are woven into the fabric of our lives in every aspect of our lives. And this company, this quarter proved that. And even without the pandemic, these companies were executing very well. The pandemic definitely helped them, but they're executing very well. This is where you go to in the market, even after the pandemic. They're going to be around for a long time. The addressable market is still huge. They still tap just the beginning of it. So I think the runway ahead is still huge, and these companies are just on the right track, executing to perfection.
Let's start with one of the names that's getting a big lift today, and that is Apple, announcing a 4-for-1 stock split in that earnings call. When you look overall in the performance for the company, a double-digit growth in products and services. You surprised about the kind of growth we saw, especially given that we didn't necessarily see a big catalyst for example, iPhone sales.
Yeah, absolutely. I think iPhone was a big surprise, and services is coming on very strong. China came on very strong. So especially the iPhone sales, it sold as if it was the Christmas quarter. Just amazing. We don't know if it got pulled forward or what, but ahead of the 5G cycle, which is again supposed to be expected to be a huge push up, this was a great quarter. So any which way you look at it, the Apple's quarter was great, and it's nowhere saturated. Still a long way to go, and they're executing, especially the services part. And there's so many levers to pull that they have, so they can just go on and on from this point.
And Santosh, it's worth noting that Apple has been among the most aggressive in terms of the store closures. We've kind of looked to their retail outlets to see whether other companies would follow, especially as we've seen the uptick in coronavirus cases. So really surprising to see this kind of performance, given that they have really been on top of these closures. You look at what's played out in this month with those cases and the stay-at-home measures and the closures, and then you look to a few months down the line with the new iPhone coming out, even with the delay. How much upside do you see in the stock?
I see tremendous upside. I mean, if you look at the whole overall picture, about roughly 330 million, roughly 30% of the base is due for an upgrade. China is still picking up, and the 5G cycle is coming up. So I think the upside is huge ahead of this, even after all this. So I think there's no stopping this company at this point. The runway ahead is very good in terms of all the different variables.
Let's talk about another company, Amazon, a blowout quarter here. I mean, if you look at just the job creation, 175,000 new jobs in March at a time when we have seen huge cuts. A lot of this, of course, driven by their e-commerce business as well. We were talking yesterday going into the earnings, whether the sort of the 64% runoff, or maybe it's more than that now, in the stock is actually justified. Is it time to re-rate the stock now, given the performance?
Yeah, I think on a short-term basis, you can see it pulling back a little bit just to kind of digest. Kind of get itself together, kind of rationalize the stock price. But you see a long run ahead. I mean, e-commerce is still only 19% of the overall retail market, and this company has, again, like the other ones, so many levers to pull again. Plus, the cloud business is still going very well. The AWS business, and they're getting into others. The advertising business is picking up. There's so many other businesses coming online also. So this company again is very well positioned for the future. Yes, there will be a short-term correction, but long-term there's still a long runway ahead.
When you look at Google and Facebook, at least on the ad side, certainly different narratives emerging here. Google seeing its first year-on-year revenue decline, partly because of the weakness in their ad sales. Google has, they get ads more from sort of the travel side, which certainly has been a significant, weakness over the last several months. How do you contrast the two performances here between these companies?
I think if any of the three got impacted by the virus, it's really Google, because that's they got impacted in the areas that they dominate in. So it'll come back up, but I think even though the quarter was down on a relative basis, it was still a good quarter. On such a big base, growing at these percentages is still very admirable. So I think Google is fine. Yes, they're slowed down. Yes, they've been impacted by the virus, but I think they are holding their own. Again, they have the YouTube and they have other levers to pull down the road as well. So all these companies, that's the beauty of it. They're not one-trick ponies. They have so many levers coming up, so many levers to pull. So they will continue to execute very well.
And finally, Santosh, how should we be looking at the benefits we've seen for these companies on these stay-at-home, moves, the digital acceleration, whether it is in the cloud space or the product space? In the case of Apple, has a lot of that demand already been pulled forward? I mean, the kind of growth we saw in this quarter, is that sustainable?
Yeah, there is a little bit of that. It got pulled forward. But as you know, everything is moving towards digital economy, digital lifestyle. So I think maybe the near-term demand got pulled in, but overall the demand ahead that's where the demand is going to be. That's where the world is moving. So I think these companies are well positioned on the sweet spot of where the whole economy and the market is going.